Who really owns the world? If you ask the average person on the street, they'll probably say BlackRock. They'll talk about Larry Fink, $11 trillion in assets, and the massive office in New York. And they aren't technically wrong. BlackRock is the largest asset manager on the planet. But there is a ghost in the machine. A company that is quieter, more secretive, and in many ways, much more powerful than BlackRock could ever be. I'm talking about Vanguard. While everyone is watching BlackRock, Vanguard has quietly become the single largest institutional investor in 84% of the S&P 500. They are the top shareholder in Apple, Microsoft, Amazon, and Tesla. They manage over $10 trillion in global assets. But here is the crazy part. You can buy shares in BlackRock. You can look at their owners. But you can't buy Vanguard. Vanguard is owned by its own funds, which are owned by its customers. It is a self-owning $10 trillion perpetual motion machine that has effectively become a universal owner of the entire global economy. And right now, this machine is sending a signal that should have every single one of us terrified. While BlackRock is out there buying growth stocks and tech assets like everything is fine, Vanguard just made the largest institutional risk-off move in financial history. They quietly moved $4.7 trillion, that's more than the entire GDP of Japan, out of growth stocks and into defensive positions like gold, cash, and treasury bonds. Why? Because Vanguard's models are screaming that the dollar system is entering a terminal collapse. Today, we are going deep. We're looking at why Vanguard's unique structure makes it more dangerous than a bank, why its passive investing style is actually a massive power grab, and the $4.7 trillion warning that Wall Street is trying to ignore. To understand why Vanguard is so powerful today, you have to understand where it came from. In 1975, a man named John Bogle did something that was basically a corporate divorce from the rest of Wall Street. He founded Vanguard in Malvern, Pennsylvania, with a radical idea. The company shouldn't be run for profit for outside shareholders. Instead, it would operate at cost. Bogle's logic was simple. He discovered that most mutual funds didn't actually beat the market indices. Even when they did, the high management fees ate up all the returns for the actual investors. So, he created the first index fund for regular people. He told the world, stop trying to pick winners. Just buy the whole market and pay almost nothing in fees. At first, Wall Street laughed. They called it Bogle's folly. During its first IPO, Vanguard only raised $11 million, way below the $150 million they expected. But Bogle didn't stop. He grew the company from 3 employees to over 20,000 today. Because Vanguard is owned by its customers, it doesn't have the classic conflict of interest other firms have. Most financial firms are trying to suck out as much in fees as possible to make their owners rich. Vanguard's owners are the people paying the fees. This allowed them to slash fees to an average of 0.08%, while the rest of the industry was charging 0.44%. That tiny difference changed everything. Trillions of dollars started flowing away from traditional banks and into Vanguard. By 2025, Vanguard and BlackRock had captured over 80% of all the money flowing into the entire asset management industry. Vanguard isn't just a company anymore. It's the primary way that over 50 million people save for retirement. And that gives them a seat at the table of every major corporation on Earth. We are now living in the era of the Big Three: BlackRock, Vanguard, and State Street. Together, these 3 firms manage over $20 trillion. To put that in perspective, that's roughly equal to the entire economic output of the largest countries in the world. But here's why their power is quiet. They aren't like the old-school corporate raiders who would buy a company, fire the CEO, and sell the parts for a profit. The Big Three practice passive investing. They track indices. That means they rarely sell. They are permanent owners. Because they hold shares in almost every major corporation, they command extraordinary voting power. Vanguard and BlackRock are among the top 3 investors in all 505 companies in the S&P 500. Think about your life for a second. The phone in your pocket? Apple. Vanguard owns 7.6%. The computer you use at work? Microsoft. Vanguard owns 8.1%. The car in your driveway? Tesla. Vanguard owns nearly 6%. The store where you buy your groceries? Walmart. Vanguard is the #1 owner. They aren't just watching from the sidelines. Even though they are passive, they vote on behalf of millions of people at every single shareholder meeting. They decide executive pay. They choose who sits on the board of directors. They determine corporate strategy. In fact, the Big Three now control an estimated 25% of all the votes cast at the biggest U.S. companies. This has created what experts call the Goldilocks dilemma. If Vanguard is too hands-off, they leave poor management in place to run companies into the ground. But if they are too hands-on, they become unelected, unanswerable world regulators who control the entire economy behind closed doors. And while BlackRock likes to be the public face of this, Larry Fink writes letters to CEOs telling them how to run their businesses. Vanguard prefers quiet engagement. They have off-the-record conversations with CEOs and boards that steer corporate strategies long before the public ever hears about them. Executives know Vanguard has the heft to make or break their career, so they align their business plans with Vanguard's preferences before a single vote is ever cast. Now, let's talk about the alarm bells. In early 2026, data revealed something that should have been front-page news across every financial site. Vanguard, the company that prides itself on long-term, steady, boring investing, repositioned $4.7 trillion of its assets. This wasn't a gradual rebalancing. This was an emergency exit. Vanguard slashed its exposure to the stock market from 68% down to 41%. They increased their treasury holdings by 340%. They boosted their gold and precious metals allocation to 11%, the highest in the firm's history. Why would the world's most sophisticated risk management machine do this? Because of debt mathematics. In 2025, U.S. federal interest payments hit $1.6 trillion. That is 32% of all federal tax money, just gone, consumed by interest on the debt. Projections show this hitting 45% by 2028 and 60% by 2030. History is very clear about this. No country has ever sustained debt service costs above 40% of its tax revenue without a total collapse of the system. Vanguard has a fiduciary responsibility to protect the retirement funds of millions of Americans. Their moves suggest that they anticipate a market where preserving capital is the only thing that matters, because generating returns is about to become impossible. They've seen this pattern before. It happened with the Spanish silver debasement in the 1500s. It happened with the British pound sterling crisis after World War II. It happened with the Roman denarius in 200 AD. In every single case, the pattern is identical. A reserve currency accumulates too much debt, starts printing money to fund its spending, loses international confidence, and then experiences a rapid terminal decline. Vanguard isn't just betting against the stock market. They are betting that the United States has entered the final phase of a terminal collapse cycle. And they aren't the only ones. S&P 500 companies are currently sitting on $3.7 trillion in cash, a 47% increase in just 2 years. They are building inventories 23% above historical norms, preparing for supply chain disruptions. The smart money is already at the exit. Most people are just still sitting in the theater, waiting for the movie to finish. This leads us to the most dangerous part of Vanguard's power: common ownership. Because Vanguard and BlackRock own massive stakes in almost every company in the same industry, they have accidentally destroyed competition. Think about airlines. If you are a shareholder in only one airline, you want that airline to crush its rivals and take their customers. But if you are Vanguard and you own 10% of every airline, you don't want them to fight. Competition is expensive. Fighting for customers lowers ticket prices and cuts into profits. Vanguard would rather have stability across the whole industry than see one company win. Research has already shown the impact of this. On American airline routes where common ownership is high, ticket prices are actually higher because the companies have less incentive to compete. We see the same thing in pharmaceuticals, where companies with the same major shareholders have less motivation to innovate new drugs. When a few massive firms control the entire economy, the invisible hand of the market stops working. Consumers end up overpaying, innovation slows down, and the whole system becomes a homogenized version of itself where everyone is just trying to protect the total portfolio value rather than building better products. You might think, okay, so they own everything, but they are passive. They don't borrow money like banks. How can they hurt me? This is where the systemic risk comes in. Unlike the 2008 financial crisis, which was caused by banks borrowing too much money leverage, the next crisis could be caused by liquidity mismatch. Vanguard and other fund managers allow you to redeem your money daily. You can click a button and sell your shares in an instant. But the underlying assets Vanguard owns, like corporate bonds, aren't always easy to sell. In a time of market turmoil, if millions of people try to withdraw their money at once, Vanguard is forced to have a fire sale. They have to sell assets at huge discounts just to get the cash for the withdrawals. This drives prices down even further, which panics more people, which creates more withdrawals. We saw a preview of this in March 2020 during the COVID-19 crisis. Bond markets essentially froze up. The Federal Reserve had to step in and buy corporate bond ETFs, many of which were managed by Vanguard and BlackRock, just to keep the system from collapsing. The central bank was literally funding the asset management industry. This proves that these firms are now too big to fail. If Vanguard experiences a liquidity crisis, it's not just a problem for their investors. It could trigger a full-blown global financial meltdown. And yet, because of their massive lobbying power, they've managed to avoid being regulated as systemically important like the big banks are. They've successfully framed the conversation to keep the regulators off their backs. There is one final problem we have to address: the agency cost. Vanguard has the power to hold CEOs accountable. But do they actually do it? Researchers Bebchuk and Hurst have pointed out that Vanguard has a massive incentive to be excessively deferential to corporate managers. Why? Because Vanguard also makes a lot of money managing 401k plans for these very same corporations. If Vanguard starts voting against a CEO's pay package or challenging their strategy, that CEO might take the company's multi-million-dollar 401k business somewhere else. Data shows that the big three vote no on executive pay far less often than other large investors. Vanguard also underinvests in stewardship. Even though they manage $10 trillion, it's estimated they only spend about $5,000 in stewardship costs per company they own. Think about that. They are the #1 owner of the most complex companies on Earth, and they spend less than a week's salary for one person to oversee each of them. They aren't doing deep dive analysis on whether a company is being run well. They are just rubber stamping the status quo because it's cheaper and safer for their business model. We are heading toward a world where three management teams, the Giant Three, will dominate the voting power of practically every significant public company in America. By 2038, it's estimated that the Big Three will cast 40% of all the votes in the S&P 500. Vanguard isn't just a place to put your savings anymore. It is a new form of power that has never existed in human history. It is a shadow government that is neither directly elected nor accountable to the public. They decide how your companies are run. They decide how the market competes. And right now, they are moving $4.7 trillion into gold and cash because their math says the current system is mathematically impossible to sustain. BlackRock gets the headlines because they want to be seen as the leaders. But Vanguard is the one you need to watch. They are the permanent owners. They are the ones who don't have to answer to anyone. The question isn't whether they have the power. They clearly do. The question is, what happens when the smartest money in the room stops believing in the room itself? Vanguard has already made their move. The $4.7 trillion warning has been sent. Are you listening?